I will hand it over to our CFO, Mohit Agrawal, for an update related to the financial performance of the organization. Thank you.
Thank you, Manojji, for your insight. Good afternoon, ladies and gentlemen. I'm starting with financial results. During Q3 financial year 2022, our revenue from operations increased by 55% quarter-on-quarter basis to 688 crores. EBITDA also increased in the same line by 96.3% quarter-on-quarter to 214 crores, while EBITDA margin reported for the Q3 is 31%. Our PAT is also increased by 98.4% quarter-on-quarter to 161 crores, with PAT margin at 23.4%. The strong business performance and continued business growth supported by higher demand, increasing carbon credit prices, our geo expansion, our strategic decisions of geo expansion, hiring of new associates across the world has given a thrust to increase in business. During first 9 months of financial year 2022, we have reported a revenue from operation of 1325 crores as compared to 191 crores for full financial year of financial year 2021. EBITDA of rupees 370 crores as compared to 25 crores for full financial year 2021 is also on a growth path. And on similar manner, PAT is on 278 crores as compared to 19 crores for the full financial year. As compared to EBITDA and PAT margin almost doubled to 27.9% and 21% respectively. And we are very much hopeful for the same performance in upcoming quarters. Looking at a project pipeline, I wish to say that we have a pipeline of 150 million credits in the next 3 to 12 months period, and we can monetize all these credits in a very better manner. Looking forward, higher global carbon credit demand, new demand generation from Persia, as already our MD has told you, with the cryptocurrencies and coupled with other positive outcomes from COP26 are expected to widen the carbon credit demand in near future. With a strong business fundamentals and a positive outlook, we are confident of maintaining our current growth momentum and maximizing value for our all stakeholders. This is from my side. We can start Q&A session.
Thank you very much.
Yeah.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Samir Pollard from AUM Fund Advisors. Please go ahead.
Yeah, hi. Am I audible?
Yes, you are audible.
Good evening, Manishji. Congratulations on a phenomenal performance on the P&L side. Just some clarifications, given that we've not had much exposure to this company. So when you say revenue from operations of 687.8 crores, how many sort of carbon credits would you have sold in this particular quarter?
So during this financial year, during last 9 months, we have supplied around 70 million credits. So almost during all the months now we are getting the constant demand, because during last financial year it was like at the last 2 quarters maximum demand used to come, but now since various corporates are looking to buy carbon offsets during the whole year, like different corporates, they do decide at the different time period. So almost every month we do have that we have observed during last 9 months. Almost we do have equal load, you can say, every month on month basis.
Okay. So if I look at the direct expenses line in your presentation of about 448 crores, So this amount will include all the costs that you incur for registration, consultants, audits, etc., and the payouts to the clients who are putting up these renewable energy projects. Is that understanding correct?
Yes.
Yeah.
And in this, so wherever you book revenues, if you book 688 crores of revenues, then the direct expenses means again that all the payables to your customers who are selling you these credits are all accounted for. It's not like some of those what you need to pay them will come in future quarters. Is that correct?
Yeah, so Mohit, can you please add?
Yeah, I'm there only. Sir, I think you have asked that we have accounted all the payments in our direct cost, right, sir?
Yes.
Right. Yeah. Whatever the invoices has been raised and whatever the inventory we have received till 31st of December, that has been booked, and that is booked on an accrual basis, sir, not on a cash basis. So that means whatever the credits for which we have to pay in the future and invoice has not been received and credit has not been received yet, that has not been booked under this, sir.
Okay, understand. So what the P&L looks fantastic, but if we don't have the detailed balance sheet. If I just look at your slide number 9 in your presentation, despite making 213 crores of EBITDA this quarter, your cash balance cash and cash equivalents is down from 24 crores to 1 crore, and your borrowings have increased from 0 to 20 crores approximately. So what is the working capital cycle that the company is working with? I mean, what sort of debtors are we working with? It looks like the cash flow generation isn't there, though the EBITDA at the P&L level looks pretty phenomenal at 213 crores.
Yes, sir. I'm just explaining the thing, sir, with you. Being a good PAT and good EBITDA we have booked, we have paid 80 crore of advance tax as an income tax to the income tax department, as well as our GST receivable to the tune of 90 crore is blocked in that period, and we are in this month, means in January itself, we have received 16 crores out of that GST receivables, and next 35 crore is receivable by 31st of January. They have already approved. It's a cycle, business cycle, where we have to infuse the money and block the money for 60 to 75 days at least. On data turnover ratio, sir, we have a data turnover ratio of 16 days as of now, which was in financial year 2021. It was approximately 22 to 25 days at that moment. We are on the we are working to decrease the data turnover ratio. Inventory turnover ratio is 33 days right now, sir, because we have maintained the inventory to the tune of 30 to 35 days of business requirement. Considering the rates are increasing, demand is very huge in international market, or you can say carbon credit market. Considering that, we have consciously taken decisions at management level to continue with the inventory of 30 to 35 days. Apart from that, demand is on the higher side to grab the projects as much as possible within India and outside India, sir. We have started giving some advances to the suppliers, or you can say the project owners. Okay, so that is also increased, and right now the advances to the creditors, or you can say suppliers, is in the range of 80 crores. So all these put together, sir, you are seeing that, or you are looking at that we have used our CC line, that is the cash credit line which is a short-term borrowing on 31st last week of December. So that's the overall cash flow which I have explained in a shorter answer.
So am I right in understanding that you in any case always were paying in advance until the credit came on behalf of your clients to the agencies for registration, to the consultants and auditors to come and do their audits, that you were in any case funding your clients, but now you are paying your clients, as you mentioned, an 80 crore amount in advance for the carbon credits? Is that correct?
Yes, sir. For that carbon credit, we have paid to different clients to the tune of 80 crores, which will realize by March to June. within the tenure of that.
But why do you need to pay 80 crores? I mean, why do you need to pay anything to the project owners? Is this a competitive strategy that you need to get the carbon credit mandate from them, and hence you make an advance payment?
It's a contractual agreement with such kind of client where we do agree as a business commercial where we are offering 5 to 20% depending on the negotiation with that client and depending on the size of the carbon credits, project size and time taking for the registration, validation, etc. Considering all the factors of the business, we provide the competitive pricing as well as the competitive terms and conditions so that client remains with us.
So I have a concern then. So if I just take your 1,324 crore revenues for 9 months and divide it by Manishji said approximately 70 million, so 7 crore credits sold. That gives me approximately 190 rupees per credit, which is about $2.50. I'm just doing broad math.
Average, sorry to interrupt, sir. Average pricing of credit is not a good way because.
I understand that some kinds of credits will have much higher prices and some kind of credits will have lower prices. Right. This is a very average number. But I'm saying, suppose you go and contract with a customer for $2.50 credit, which is what you've earned on an average basis. And you give them an advance, and by the time the registration happens and the credits are sold, you've already paid the customer in advance, so you're taking effectively a call on carbon prices or carbon credit prices, which for whatever reason if they collapse, then you could have ended up paying the customer much more initially. Is that correct? I mean, it may not happen, but are you exposed on that?
We have taken all the risk measurement decisions, or we have all the risk measurement metrics within the organization, and wherever we get into such kind of contracts, we do always measure the risk potential, global risk potential in the carbon market, and we do have suitable terms and conditions mentioned in the contracts to secure the interest of the organization. So, although as already told, like it's a low probability, low risk, but yes, we have taken the internal measures to do equal assessment of all the opportunities that we are signing.
No, I understand, but you are exposed to the risk that you've already paid your client in advance and the prices crash. It may not happen, but that risk exists.
Yeah, risk is there, but it's highly low risk. That the domain is very, very at the lower end in the risk matrix.
So fair enough. My another question is, if you've done 70 million credits, what sort of guidance and what sort of inventory you already have for the coming year, for the coming quarter rather, and then for FY23 as well?
So for next quarters, that's what Mohit had informed during the last conversation. We do have pipeline of around 150 million as of now, although we used to get the contracts on a month-to-month basis, and so more inventory we will do add in coming months. So we do have very strong position in reference to the execution of the contracts and delivering of the credits.
But 150 million, how much of that is coming for this quarter, this March ended quarter?
So around 30 million we will do, approximately we will do add 30 million additional volume in reference to the supply of credits.
Thank you. Mr. Pollard, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Q3 Raju from Equity Analysts. Please go ahead.
Hello. Can you hear me?
Yeah, please.
Yeah. Congratulations for the great set of quarterly results. My question is on your joint venture with Shell. So it looks very nice to see that Shell will actually provide all the capital. But EKI will have the majority ownership. Can you just give details of what will be the revenue, what is the agreement with Shell on how we will earn revenue? Will Shell be able to buy back all the credits, or you will go out in the market and sell the credits? Can you give a little more details on that?
Yes. So through that joint venture that we had done with Shell, Netherlands, actually majority, the JV main core job would be to identify the projects from the nature-based solution projects like deforestation related projects, grassland, wetland, or other natural ecosystem projects where we would be able to sequester carbon credit and then get the project registered. Under the suitable carbon credit mechanism, where we would be able to get the issuance of the carbon credit. So Shell is having exclusive rights on the projects that the JV will do identify to get the first investment rights. If they will do have some other priorities, then we can opt in the new investors to invest into that nature-based solution projects. So the investment would be to put the projects on ground. As of now, we are working on the projects, for example, solar power project or wind power project, where the investment had already been done by the project owners. But now here we will do identify the sites where the projects can be developed. We will do source the fund from majority from the Shell. Also, EKI would be having the option to co-invest. Otherwise, based on our strategic decisions, we may not opt for the same. So yeah, so majority of the investment Shell would be able to do, and then the JV will work under EPC model, engineering, procurement, and construction model, and whosoever will be the investor would be getting the option, the exclusive rights to get the credits. Otherwise, the investor may ask us to sell the credits and get back the revenue, whatever they are investing through the JV. So that is the business model we do have, and EKI would bring all the expertise that we have gained during last 13 years to execute those projects on ground. So Shell, the JV would be having getting the fund management fee, carbon credit advisory fee, and also would be having some percentage rights to buy the credits from the investment that the Shell would be doing. So that is the business model that she would be doing.
Oh, great. Thanks for the clarification. Just another follow-on question on that. So effectively, it means that Shell or whoever is the investor will invest in the project and also pay money to buy the carbon credit. Sorry, I'm asking. We have all these doubts because it's a pioneering concept in the world. I think many throughout the world people will have all these questions. So my question is, why should an investor invest money in a project and again collect the credit and again pay money to the company? Is my understanding right?
So it depends on the agreement that we will do on project to project basis. For example, if Shell is going to invest, so it depends on each contract. But the primarily the concept that we had coined in this particular JV that we have done with the Shell. So Shell would be investing a majority of the fund for the project development, and they do have exclusive rights to get the credits. So whatever the investment they are doing, they need not to pay again, but they need to fund all the activities that we are going to do on ground and giving all advisory services. So everything they need to fund through the project estimation that we'll do at the start of the project.
Okay, so in which case the revenue for the JV, assuming that they have the first right to take all the credit without paying any money, the revenue for the JV will be just the advisory services and the project development services, right?
Yeah. So there would be three different sources that we would be having. So, or you can say, in fact, four revenue sources. So one is the projects which are already installed on ground. So we would be giving advisory services and whatever the services that EKI is giving as of now for majorly for the technology-based projects. So similar model we will do opt in the JV. But specifically on the nature-based solution project. So that is the one revenue source that they will be having. Another one is to manage the fund, to put the projects on ground. Either we can hire our own manpower, either we can outsource it through the NGOs, for example. So that would be the second revenue. Third would be giving advisory services related to the carbon credits. And since we do have exclusive rights to execute all these activities, we would be also having the option rights to buy the credits at the lending price. Some percentage we have as per the signed agreement with them. So these are the 4-5 different revenue sources that we will be having.
Oh, excellent. In the presentation, we have this 1,000 plus carbon credit projects in the portfolio. Now, that's terrific. But what exactly does it mean? Does it mean that this 1,000 projects, they have an exclusive agreement with our company that they will only sell it to our company? Like, why do we say that we have 1,000 plus projects in our portfolio? What does it mean?
So as of now, sir, we at any point of time we do execute more than 700, in between 700 to 1,000 projects. So various projects are used to be there at various stages like validation, registration stage, verification issuance stage, either selling of the credit stage. So various projects, different around 1,000 projects we do have having different commercial terms and conditions for. Some we do have exclusive rights, for some we do have, so different projects they do have different commercial terms and conditions, and
okay.
Yeah.
Okay. So if I may, one more question, which is this associate company formation, in the name of GHE Reduction Private Limited. I read in a news article that EKI Energy will retain 49% and 51% stake will be given to other investors. My question is, if we are the pioneer, why the parent company will take a minority stake? Why not parent company? If we can make the Shell joint venture, we have a 51% joint majority stake with the Fortune 5 company. We are now floating our own company. Why we are settling for a minority stake of 49%?
So initially, based on the funds requirement, we have opted for the same. But down the line, more investment would be required to do the manufacturing activities, and slowly this particular percentage would increase, and in near future it may become a subsidiary of EKI. So that is the plan we do have in near future.
Thank you. Mr. Raju, may we request that you return to the question queue for follow-up questions. The next question is from the line of Surbhi Saraugi from Smith's Capital Markets. Please go ahead.
Hello, am I audible?
Yes.
Yes.
Okay. Sir, my first question is that, considering your current quarter performance in terms of revenue and profits, can you throw some light on the sustainability of the numbers, and what revenue and profits are you expecting for full financial year 22, and also some guidance for financial year 23?
So referring to the volume that we have supplied to the global carbon market during this financial year, during last 9 months, we had supplied around 70 million credits. During next quarter, we are targeting for nearly 30 million credits, and during next financial year, it could be in between 100 to 150 million as of now. But slowly, since every month we do get into a good number of contracts, so this particular volume will also increase. So that gives us the sustainability in reference to the numbers in the balance sheet and P&L. Apart from that, the two activities that we have added related to backward integration to our industry by formation of a joint venture company with the Shell. So we will be having our own projects on ground for very long term, since nature-based solution projects used to get registered for 30 years to 90 years in different mechanisms. So it is going to give us long-term sustainability. Apart from that, manufacturing of cook stoves and integrating the same into our projects that we are looking to put in a large number of projects that we are looking to put in near few quarters. So these are the two additional activities apart from the primary activity that we are doing for last 30 years. All these the three activities are going to help us to gain sustainability.
Okay. And sir, my next and final question is that what are the current carbon prices both in the voluntary and compulsory market, and also what is the future trend?
As of now, any credit which are originated from developing nation like India, China or Brazil, we do have very less access to the compliance market, which are there, like the European Union emission trading scheme or South Korea emission trading scheme, or South Africa carbon mechanism. So in the compliance mechanisms, Indian originated credits are very less consumed, almost negligible, you can say. So the only market we do have is related to voluntary markets. Although compliance market will do come in next 1 to 2 years, since during last COP26, Article 6 of the Paris Agreement had already been negotiated, and all the nations are working aggressively to put the regional emission trading schemes or the national emission trading scheme, regional one and international one. So these are the three activities various nations are doing. So.
Okay, sir. That is all from my side. Thank you.
Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Vivek Kaul from Bridge Capital. Please go ahead.
Yeah. Hello, Mr. Manish and Mr. Mohit. First of all, really appreciate that despite EKI being an SME company, you're actually publishing quarterly results, though you'll have to just publish your half-yearly results. And you're also holding an investor call, so I really appreciate that. The second thing, what I wanted to say was that you just mentioned that GHG Technologies is not your subsidiary yet, right? So when do you have plans to make it a subsidiary? When will that kick in?
It may happen during next 1 to 2 quarters.
Okay. And also, sir, you have mentioned that GHG is going to be mainly about efficient cook stoves, right? So if my understanding is right, there's a difference in carbon credit prices for different categories, right? Say maybe trees and green plantations have a higher carbon credit price versus your efficient cook stoves, which are much lesser. Am I right?
So actually, the carbon credits which are originated from India are ranging in between $0.5 to $15, depending on the vintage of the credits, depending on the technology, the sustainable development goals that the project is supporting. So there are various factors through which the carbon credit price is used to get determined in the international carbon market.
Okay, and just a ballpark figure, how much would be for this efficient cook stove carbon credits? Any approximate as per today's date?
So depending on the volume and the market because on day-to-day basis it's used to change. It's ranging in between $4 to $6.
Okay, all right. Just my last question. Sir, initially you'd be well aware that there were these big 4 consulting firms, KPMG, Deloitte and others, who were also in carbon credits few years back. and then they moved out. Now there are reports that they are resuming their operations in certain countries. They might resume in India as well. Given that they are globally reputed brands, if they come into India and restart operations, which is a big possibility given that it's a very lucrative market and carbon credit prices rising, what kind of a competition will they pose to EKI? And do you have plans in place in case that happens?
Yeah, so various the three activities that already had been discussed during last conversation related to sustainability in reference to the growth and the competition both. So we do have various long-term contracts with the client, and also on month-on-month basis we do find different sectors, different technologies for which we can work. So all these activities, although it will do face the competition not only from all these big fours, but we do have potentials from the other national or international companies, because it's a global market now. Earlier also it was global market, but now it's more lucrative. So the competition is bound to come apart from this companies, and we are very much strong enough in the market position to face that particular potential competition through different sustainable activities that we are looking in reference to having more and more projects that we do execute, having more and more expansion to the nations where we can to small nations, for example Nepal, Bangladesh, or maybe Kenya, for example. So small nations, that means in reference to the number of projects that they do have. So and apart from that, there's two activities related to the Shell JV and manufacturing of cook stoves, backward integration to our supply chain. So all these activities are definitely going to help us to encounter all these potentials.
Okay. Thank you, Mr. Manish and Mr. Mohit.
Thank you.
Thank you. The next question is from the line of Vipul Lamba from Lamba Investments. Please go ahead.
Yeah, thanks for taking my question. My question is, how much is the overall revenue which we do is from Indian clients, and how much is from international? And can carbon credit generated in one nation be sold in other nation? Like generated in India, can it be sold internationally?
Yeah, so the credits, this carbon credits is a kind of an environmental commodity, and it is tradable internationally. And why this market had been formed? Because the nations which are not able to reduce the emissions, or the companies which are not able to reduce the emissions, they are allowed to buy the carbon credits which are originated from the developing nations like us. It is going to give us the second line of finance to the project owners in the form of climate finance. So yeah, definitely such kind of environmental commodities are very much internationally tradable.
And how much is our revenue from Indian clients and from international? Is it majorly international?
So as of now, around 80% of our projects are from India, and 20% projects that will execute are out of India. And slowly, since we are looking forward to have more and more nations to start our operations, so definitely this ratio will, the ratio from the international projects will bound.
So what I'm trying to say is like, as you said, the carbon credits generated in India can be sold outside also. So when we are from a sales side, from client perspective, is it the same ratio which you're saying?
No, just to clarify that, sir, our revenue is generated from international or overseas. 95% revenues are generated from overseas client only, because in India there is no obligation to buy the carbon credit right now. So all the clients are from overseas only.
Okay.
And since during last question we have told, like there is no any compliance within India and in other developed nations, so it's only a voluntary market which is there. Okay. And
Okay. So, is the prices which we quote, like we talk about that India price for carbon, is it linked with the price trend of international carbon credits? Because there is significant difference. So, is it linked with that? Like, if it is going up, the international price, will it have an increasing trend in India also?
Yeah, definitely. Since our market is globally connected, so everywhere, wherever we are working in the voluntary carbon markets, the other rates, for example, if you see in the European Union emission trading scheme, the rates are nearly $100, for example. But since we are not able to supply because of the protocol that European Union emission trading scheme had formed, so those two markets are not linked. In the voluntary carbon market globally, India credit or the credit generated from China, for example, will be having almost similar position.
So you're saying if internationally credit prices increases, it will have a correlation in the India credit price also, right?
Definitely, specifically for the voluntary markets.
Okay. One last question. Any significant risk which you see which could have the impact on the carbon credit price, or a regulatory risk, or any change, if that happens, it can have a significant impact on the carbon credit price?
Yeah, so before COP26 Conference of Parties meeting number 26 that had been organized during November 21 at Glasgow, UK. So before that, there was a high confusion in reference to the compliance market and voluntary market, how they will be able to survive since we do have a requirement of corresponding adjustment. That means double counting should not happen between the two nations. But all those potential risks are now being eliminated after having complete negotiation in between the nations. So there is no any potential risk that we do in related to the demand or supply. We do not anticipate any risk before next conference of parties meeting number 27, which is going to held in Egypt. So it could happen during next November or December. But there is hardly any risk because during COP26 everything had been negotiated under Article 6 of the Paris Agreement.
Okay. So one last thing, can it be possible that a regulation can come that the credit generated in the same nation has to be sold there? It cannot be sold internationally. Can this, because I was reading somewhere that this is again one of a debate topic, that credit generated in China or India being sold in US, that effective. Do you see as a regulation, or I'm completely wrong in that? So sorry, it may be a silly question.
So as of now, so there is no any emission trading scheme, or there is no any regulation across the world which obligates any project owner to sell the credits nationally and not internationally. So there is no any barrier as of now.
Okay. Thank you. Thanks, Manish.
Thank you.
Thank you. The next question is from the line of Bhavesh Birla from Eversource Capital. Please go ahead.
Hi everyone. Good evening. Am I audible?
Yes, sir.
Yeah. First of all, congratulations, Mr. Manish and Mr. Mohit, and thanks for taking the time out of this. My question is regarding the GHG reduction technologies. So, first of all, wanted to understand in terms of the business activities which this new entity will undertake. So the presentation mentions only Cookster. So are you open to looking for other projects for the generation of carbon credits, like in terms of your the renewable or other kind of projects for this particular entity? And secondly, just want to understand the strategic rationale behind the backward integration and creation of this SPV, because I understand that you anyways have a healthy pipeline of around 70 million credits which you have sold in during the 9 months, and you have 150 million credits already for the next 9 to 12 months. So what is the strategic rationale for going backward integration in order to generate more credits?
Yeah, so we are now looking for the investors, the long-term buyers, to invest into such kind of activities. So in NBS, we do have business model like whosoever will do invest will do get the credit. But here we are taking the investments, the advances from the buyers, potential buyers, and then we will be supplying the carbon credits to them for next say 2 years or 5 years. So that is the business model we do have. Initially, we have started with improved group stores, ICS, and then slowly we would be going for more community-based projects, not big renewable energy projects, but community-based projects like biogas projects or safe drinking water projects or other technologies which are going to help the local communities apart from improving their employment position or their health position or indoor air quality, but also we would be able to generate carbon credit. So this is the activity that we are going to have this. So earlier to this Shell JV and to GHG reduction, we were majorly focused on the giving advisory services, comprehensive advisory services. But now we are looking to give the whole advisory services related to the project implementation on ground, then also giving the carbon credit advice services, and then supply the credits under different business models that we have coined in. Yeah.
Okay. Thanks for this. Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah. Thank you, Sirji, for this opportunity. Sir, firstly, it's really, sir, congratulations to you, sir, for at least hosting the call. Wherein, sir, but firstly, sir, we find that the investor base for the company is also very low. Hardly, I think so, sir, even few thousand shareholders are not currently participating in the growth journey. So, sir, firstly, we would like to understand what is the thought process of the management going forward in terms of having a wider shareholder base, or what is the fund requirement to grow the business? What is the current asset size, and what are we looking forward? And also, sir, for the first 9 months from the cash flow, what has been our total tax payment? How much have we made the cash tax payment? If you could throw some light on the same.
So yeah, Mohit, first we will start with the tax payment, then fund requirement, and thereafter the low base of the shareholders. We can these are the three questions I think I had been asked. So we will start with first with the tax payment.
Yeah. We have already paid the tax to the tune of 80 crores as of now till 31st of December as an advance tax, and we as per the profitability and balance sheet, our tax liability is 92 crores. So we are going to pay remaining 12 to 13 crores odd figures to the departments very soon. That is the tax part. That first question that you have asked from us. And now coming to the investment part, what are the fund requirement in near future for the company? I believe our MD will take care of that. Manishji, can you guide us on that?
Yeah, there are huge business opportunities which are there for us to grow, to increase the number of projects that we are executing, then also creating more and more projects under the Shell JV or GHG Reduction Technologies Private Limited. So as of now, we have not fully estimated the exact fund that we would be looking for. Although whatever the cash flow that we do have, we are able to manage it very successfully. But if we do get a good opportunity to expand to further raise fund, then obviously we would be looking for the same. So that is the probable answer for the question that you have asked.
Thank you, Manishji. And coming to the third point that you have asked for liquidity in market, secondary market, being a listed company on as BSE SME platform, there are some restrictions to move on main board. As per BSE norms, we have to spend 2 years on the SME platform, and then only we can move to the main board. So we are waiting for that period. As soon as possible, we will move to the main board whenever exchange will allow, as per their internal norms.
So Manishji, so as per your understanding, your answer, currently we don't have any cash requirement, any fundraising requirement, and when the business mature or the opportunities are there in the horizon, we can contemplate the same. That is what
Definitely, sir.
the misunderstanding is.
Definitely. Yes.
Sir, if you could elaborate, what are the key risks associated currently to the business? And sir, when we look at your clientele, these are mainly the ones who are carbon emitting, whether it is your power companies, the steel companies, all the metals and cement companies. So sir, these are the ones that those who are themselves reducing their carbon emission and also are giving a guidance of being net neutrality on the carbon part. So how do their gelling up with this agenda of net carbon positive going forward works well with our company, as they being our clients, sir? And what portion of the total business are from the national clients are we? If you could give the sector wise, cement se kitna hai, steel se kitna hai, other metals se kitna hai, and chemicals se kitna hai, that would give an understanding, sir, as the client is being given.
Yeah, as of now, sir, we do not have any ready data available related to the sectoral projects or the project owners who are from the different sectors. But looking at the net zero targets that Indian government had declared, we do have next 50 years. So by 2070, India would be having ambition to become net zero, and various organizations in India, they have taken different targets either by 2050 or 2060, 2070. So they do have long horizon to get into these activities and consume all the activities. For example, there are various independent power producers which are only focused on the renewable energy projects. So they do not have any obligation in reference to consuming all those offsets internally. But yes, there are a few manufacturing organizations which are there, and they may consume these credits in next 2 to 3 decades. So as of now, at the shorter term, we do not have any such kind of risk associated. And apart from the other risks that we have already discussed, which are related to the lower prices or banning the credits at any particular nation, or there are different competitors which may come in. So all those risks we had estimated at the lower level. So and the potential risk, which whatever would be there at the mid or high level, if they will do come, we would be very much prepared, since we do look at all the policies at the national level, international level, and so there is no any, as of now, we do not have identified any mid-level or high-level risk associated with the business.
Thank you, Mr. Kapoor. May we request that you return to the question queue for follow-up questions. The next question is from the line of Meenal Das from Das Funds. Please go ahead.
Hello, sir. Congrats for a good set of numbers. I just had one query that in previous quarter you had said that there was one acquisition process or it got cancelled, not sure. So the company was Pune based. So is there any progress in that, or it's been cancelled?
So earlier we were looking to get into such kind of acquisition, but that particular specific acquisition we have cancelled it internally. We are not executing anymore, but we are creating our own internal expertise to provide the similar services that already had been covered during my statements, that we are looking to develop sustainability reporting services, which will do cover everything that our manufacturing or services organization may be looking for related to the estimation of the carbon footprints or other similar services which are required related to the sustainability report preparation or the other reporting standards which are there in the form of GRI or CDP or BRSR. So we will be supporting our potential clients or present clients in reference to the same. So we are not going to execute that particular acquisition as of now.
Okay, thank you so much, sir, and best of luck.
Thank you. The next question is from the line of Nirav Dalal from MIB Securities India. Please go ahead.
Thank you for the opportunity. I had one question. I had a couple of questions and one clarification. You spoke about some numbers in terms of credits, right? You said that Q3 you had about 70 million, next quarter you have about 30 million. Is this the right numbers that I noted down?
Yes.
Okay.
So these are the approximate figures. Exact figures we would be having readily available for the same, but these are the approximate figures.
Right. So if one were to look at that and just see what the revenues were, so the price of the credit comes to about $1 less than $1.5. So is that the right way to look at it? So if I were to just look at the revenues and the carbon credit,
no, exactly. That would not be the correct estimation. For credits originated, like we are not only working in India, we do have our operations in 18 plus nations. So various projects originated from various nations, they do have various prices starting from $0.5 up to $15. So that would not be the correct estimate. It will just divide the top line with the number of credits that we have mobilized.
Right. And just one question. So in the first half of FY22, when you reported your balance sheet, you had inventories of about 81 crore, right? So what would be the value of this I believe this will be carbon credit. So what would have been the approximate value of these carbon credits, and what would be the inventory as of 31st of December?
So it depends on the day when we want to liquidate those particular inventory. So it depends on we do have various you can say the group of credits starting from solar power project or wind power project or maybe waste management project or maybe agricultural based project. So different projects, they do have different the technology origination, country of origin, and depending on the date when we want to sell, we would be able to estimate the whole inventory we need to estimate at that particular point of time. So that is the activity that we would be requiring to get the exact number.
Got that. Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
From our side, thank you everyone for your participation this evening. For any other further queries or clarification, please contact Churchgate, our investor relationship advisor, or you can connect on my mail ID that is mentioned in investor presentation that is uploaded on BFO. Yeah, thank you.
Thank you.
Thank you, Dan Captain. Yeah.
Thank you, sir. Ladies and gentlemen, on behalf of DAM Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you very much.